Let me ask you something. Do you really believe tariffs cause prices to go up? Because some people out there still say, no way, it's just political noise. Companies are just using tariffs as an excuse. But if that's true, then why are we seeing prices tick back up again for clothes, for shoes, for furniture? Stuff you and I buy all the time. Well, today, we just got new inflation numbers, and they're higher than last month. And while some people are still debating the politics of it, consumers are already feeling it at checkout. So in this video, I'm going to break down what's really driving inflation right now, why tariffs might be playing a bigger role than you think, and what it means for the Fed, the economy, and your wallet. Let's get into it. All right, part 1, headline numbers, what the latest report shows. All right, let's start with the numbers, because this just came out, and it's something you need to pay attention to. The Consumer Price Index, or CPI, went up 2.7% year over year in June. That's up from May's 2.4%. So yes, inflation is moving in the wrong direction again. Now let's talk about something really important, core CPI. If you've never heard of it, here's what you need to know. It's the version of the inflation number that excludes food and energy prices. Why? Because those bounce around a lot from month to month. Oil prices, crop failures, global stuff. Core CPI is what the Federal Reserve watches closely because it shows what's happening underneath the surface, the more stable long-term inflation trend. So in June, core CPI rose 2.9% year over year. That's a bit higher than the 2.8% we saw in May, and just slightly above what economists were expecting. On a monthly basis, core prices rose 0.2% in June. That may sound small, but it's double what we saw in May, which was 0.1%. And if that pace continues, it adds up quickly. Now, this isn't runaway inflation, not yet, but it's also not cooling off like the Fed had hoped. This is the kind of report that makes the Federal Reserve say, okay, maybe we pause on those interest rate cuts for now. Because even small bumps in core inflation can change the entire outlook. But the real question is, what's actually behind these price increases? Because some of the categories that were falling for months are now quietly starting to rise again. Let's break that down. Let's start with apparel, up 0.4% just last month. That might not sound like a lot, but if you've been tracking this, you know clothing prices have been falling for months. So this is a reversal. Footwear, up 0.7%. That's a pretty sharp jump, especially after a long stretch of price declines. Furniture and bedding, same story. Prices rose 0.4% in June. And just last month, that same category saw a 0.8% drop. So we flipped from negative to positive in just 30 days. These aren't just random price blips. These are signs, signals, that something is shifting. So the question is, why are these prices turning around now? What's pushing them up, and what does it mean going forward? Well, there's one big factor that could be driving this, and it's something that's been building for months, tariffs. Let's talk about what's really going on there. Part 2, are tariffs the real culprit? So what changed? The big thing, tariffs. President Trump recently rolled out new tariffs between 20% to 50% on goods from over 20 countries. That includes a 35% duty on Canadian goods and 30% tariffs on imports from Mexico and the European Union. That's massive. And that's not all. He's even talking about slapping 15% to 20% tariffs across the board, basically on most of America's trading partners. Now let me ask you this. If you're a retailer and you're importing furniture or electronics from Europe or Mexico, what do you do when your cost suddenly jumps by 30%? Do you just absorb that cost? Of course not. You do what any business would do. You raise prices. You pass the cost on to the consumer. That's you and me. And that right there is how tariff-driven inflation starts. It's not a big overnight explosion. It's a slow burn. The cost increase happens at the port, but you don't feel it until it shows up on the price tag. And here's the thing. It's already starting. You just haven't felt the full impact yet. Now, if you're wondering, wait, if these tariffs are so big, why didn't we see prices spike right away? That's a great question. And the answer has a lot to do with how companies prepare behind the scenes. Let's break it down. Part 3, why it takes time to show up. Why? Companies usually have existing inventories, products they bought before the new tariffs kicked in. In fact, many businesses actually front-loaded their imports, bringing in extra stock early to avoid paying higher tariffs later. Think of it as buying in bulk before prices go up. So, for a while, those cheaper pre-tariff products kept prices stable on store shelves. But now, that older inventory is running low. The new shipments arriving, they come with those higher tariff costs baked in. And that's when we start to see prices creep up, slowly but surely. This delay can make it feel like tariffs aren't affecting inflation, but they actually are, just with a lag. Here's a quote from Seema Shah, a chief global strategist at Principal Asset Management. She says, "There's still little sign of the tariff-induced boost to inflation that the Fed has been expecting. However, increases in core goods like furnishings, recreation, and apparel show that import levies are slowly filtering through." That's a pretty clear warning. The tariff effect is delayed, but it's real. It's quietly creeping into the prices we pay every day. Michael Pierce, senior U.S. economist at Capital Economics, noted that tariffs are pushing prices higher on certain goods, especially those dependent on imports, and it's becoming more visible in the data. He also points out that these pressures could limit how much the Federal Reserve will cut interest rates this year. So economists agree, tariff-related inflation isn't a sudden shock. It's a slow burn, but one that can influence everything from your clothes to your furniture to the electronics you buy. And that leads us to a major question everyone's asking. What will the Federal Reserve do about this? Because when inflation starts creeping up, the Fed can't just sit on the sidelines. There's been a lot of pressure on the Federal Reserve to cut interest rates. And that pressure, it's not just coming from Wall Street. President Trump himself has been calling out the Fed, saying they should cut rates and stop dragging their feet. Now,
bad Fed chairman, really bad. If he would lower the rates, and I tried being nice to the guy, it doesn't help. He's like a knucklehead.
Whether you agree with him or not, here's the Fed's challenge. Inflation just ticked up again. Headline CPI is now at 2.7%, and core CPI is at 2.9%. That's hotter than last month, and it puts the Fed in a tough spot. They can't ignore that. Even a small rise in inflation can give them a reason to hold off on rate cuts. And here's how it hits your wallet. Credit card interest stays high, mortgage rates don't move, and borrowing for things like cars or small businesses, still expensive. So yeah, even if tariff inflation is just starting to creep in, it's enough to mess with monetary policy. And once the Fed hits pause, all eyes stay on inflation going forward. So what does this mean for the economy, for your everyday costs, and for the rest of the year? Let's zoom out and bring it all together. So here's the bottom line. Prices are rising, slowly but noticeably. And tariffs? They're one of the reasons why. It's not full-blown panic mode, but let's be real. The pressure is building. You've got core inflation ticking up, categories like clothing and furniture reversing months of price drops. And now we're seeing import costs being passed along to you and me. And with more tariffs being rolled out, it's probably not going away over the next month or two. But now I want to hear from you. Do you think tariffs are actually worth it? Are they protecting American jobs? Or are they just another cost shift onto the average consumer? Drop a comment down below. I read them, and I'd love to see where people stand on this. And if you found this video helpful, if it helped you understand what's really going on behind the headlines, hit the like button. Subscribe if you haven't already, and turn on that bell so you don't miss the next update. I'll keep you posted as this all unfolds. Thanks for watching. I appreciate your time.